Can students make big purchases with a down payment? Have you ever wondered if students can actually make big purchases with a down payment? It might sound challenging, but it is definitely possible with the right approach. Let's break it down step by step to see how students can navigate this process. First off, a down payment is an upfront partial payment towards the total cost of a large purchase. This could be for something like a car or even a home. By making a down payment, students can reduce the amount they need to borrow, which can lead to lower monthly payments and less interest over time. Now, saving for that down payment is key. Students often have limited income, so it requires some smart budgeting. Setting aside a portion of any income, whether from part-time jobs, scholarships, or gifts, can help build that savings. It may take time, but every little bit counts. When it comes to the size of the down payment, traditional advice suggests aiming for 20%. However, many loan programs allow for smaller down payments. For instance, some government-backed loans may only requiring as little as 3.5%. This makes it easier for students who may not have a large sum saved up. Another important factor is how a down payment affects monthly payments and overall debt. A larger down payment means a smaller loan amount, which translates to lower monthly payments. This is particularly important for students who are managing tight budgets. Keeping those payments manageable helps avoid the stress of unmanageable debt. Credit history can also play a role in this process. Many students may not have a long credit history, which can impact loan approval. However, a substantial down payment can improve the chances of getting approved by lowering the lender's risk. It is also essential for students to balance their financial priorities. While saving for a down payment is important, students should also consider other expenses like tuition, living costs, and emergency savings. Committing too much to a down payment could stretch their budget too thin. To give you a practical example, let's say a student wants to buy a used car. If they save a few $1,000s as a down payment, they can significantly reduce their monthly auto loan payments. For housing, students or recent graduates might qualify for special loan programs that have lower down payment requirements, making homeownership more attainable. In summary, students can indeed make big purchases with a down payment, but it requires careful planning and budgeting. By saving enough upfront, understanding different loan options, and balancing their overall budget, students can manage these purchases responsibly while still meeting other financial obligations.